Challenger today, I think, was the worst data we've seen in 22 years in October. I think it's the second largest amount of job losses in a year since 2009. Reading that at face value, boy, that's awful. Then ADP came out and they saw job growth in October. So accelerated, and then we had 2 months that wasn't accelerated. So I think right now, if nothing else, whatever side of the aisle you want to be on in terms of, is the economy slowing or is it weak, is it growing or slowing, you're going to be right, because the economy, you're going to find data points that give you that. I think right now what's going to happen is you have to kind of stay clear of what your target is in terms of your focus in terms of stocks. You're looking at earnings and stay with earnings, because you're going to get a lot of whipsaws here with data, because we can't really rely on the data. We're not getting government data, so we're getting private sector data that in reality, they're looking at different parts of the economy telling us different things. I think, is the economy slowing a bit? Probably. But I think some of the data points, it's tough to have these big swings when Challenger comes out, headlines 22, worst month in 22 years in October. But boy, the market falls off on that, but we could have a decent report next week from somebody else. So I don't want to read too much into it. Now, if it happened a couple months in a row, I certainly think you want to read into it, but I'm hoping at some point we get government data back and starts to be, even though I don't think the government data was that accurate half the time, at least we knew what we were getting. Because right now we're getting, Challenger has been very volatile over the years anyway. So now we've got a much more volatile index that's moving the markets. I'd rather have, BLS numbers that are a little bit easier for us to kind of comprehend and know where we are.